Hello friends, welcome to learning sessions and good morning to all of you. And so do confirm the audio quality at the earliest so that we can proceed. And if you have not subscribed to the channel so far, do subscribe the channel also. I'm sharing the link with you if you want to get the PDF of this session anytime. You just need to join our WhatsApp channel. And for that case, you need to WhatsApp me writing JAIIB to the number 83609 44207. Here I have mentioned the details. Also in the chat box and otherwise. So audio video quality is working all fine. So let's start the session now. Key to the balance sheet equation. Now let me just give an idea related to you. First of all, related to balance sheet. First of all, let me give an idea related to balance sheet. So here is a space. Let's use that particular space. Now, if we look at the horizontal balance sheet, we are having two sides. One, it is related to the liabilities. The left side is liabilities and the right side is the asset side. Okay, and the total of the assets, total of the liabilities are always equal to the total of the assets, and this is the balance sheet equation. This particular thing is balance sheet equation. Now what is new in that? On the capital side we are having two type of things. One, it is related to capital, which is the inside liability. Capital is what? Let's say the amount which is contributed by the business owner to the business. That is a capital to the firm. Or let's say whatsoever the profit which is retained or any retained earnings are there. That is a capital. That's a part of the capital, right? So if we're talking about the amount which is contributed by the owner, or let's say retained earnings or any kind of reserves, or let's say we are talking about the surplus which is not appropriated, profit which you have made and you have not appropriated, that is a surplus, right? That is forming your capital and it's a liability on the business. I told you, as per the business entity concept, business is separate from the owner, right? So the amount contributed by the owner is a liability on the business, right? And even if it basically it has earned a profit, it's going to be a liability on the business, that it is to be paid back to the owner. So it's a liability on the business, right? And the other component related to liabilities, I'm not going to discuss in detail in this chapter, that we will be covering the very next chapter, but let me just give an idea. It's about the liabilities. Like it could be the case that you have taken a loan, term loan from the bank, or you have basically sanctioned bonds or debentures. So that's a long-term liability. That's a long-term liability. And also it's a case that you have taken a CC limit from the bank or overdraft limit from the bank, or let's say there are account payables, there are salaries which are payables, there are bills which are payables, right? So those are the current liabilities, right? So this component highlighted in red, this is related to liabilities or outside liabilities. We can say these to be outside liabilities, and the top component capital is basically the inside liability, we can say, or simply we say it to be capital. That's it, right? And on the asset side, we are having all the asset, whether we are talking about the fixed asset or the non-current assets or the current assets or intangible assets. These are all the assets, right? So what is balance sheet equation? So the balance sheet equation will be the total of the capital plus liabilities is always and always equal to the assets. So this is your balance sheet equation, right? This is your balance sheet equation. Now come back to the page number 1 here so that we can understand it well, right? So this is the same thing which is written over here, that the assets are equal to capital plus the outside liabilities. Assets are equal to the capital plus outside liability. Now this total is a liability on the business. This total is a liability and these are the assets. So these both must be equal. So these both must be equal. Or we can simply be saying profit or loss would be equal to what? Total revenues minus total expenses. That is your balance sheet equation, right? Now let's have a look at the trading account. Let's have a look at the trading account. See, whenever we are to prepare the final accounts in the company, what is the step related to it? What are the different steps for the preparation of the final accounts? What is the very first step? I told you earlier. It's about that you create an entry in journal, right? Then we post it in the ledger, right? Posting is being done. After that, we do prepare the trial balance, right? And if trial balance is matching or balancing, after balancing, we do prepare the trial balance. If it's all matching, then we do prepare the final statements. And here comes the first step, that's a trading account. That is the trading account. So the trading account is what? It's a financial statement, right? And the trading account is prepared so as to ascertain the gross profit or gross loss from the trading or manufacturing activity. So what we'll be getting when we do prepare the trading account, we'll be getting the gross profit. We will be getting the gross profit or we will be getting the gross loss. That's about the trading account, right? And this is related to the first stage of the final account. And after that, we are going to follow the profit and loss account and balance sheet after this only, right? So first stage is trading account, right? And we ascertain what? We ascertain the gross profit or gross loss out of it, right? So it is going to ascertain the gross result of the business operation. What is gross result of the business operation? We are going to cover that only, right? So it's going to suggest it includes all the trading activities which has been basically covered by the business. And trading account is what account? It is a nominal account in nature. What was nominal account? If you remember, nominal account is an account which is a temporary account, and further it's related to account which is having balances related to expenses or gains, incomes or losses, right? That was a point related to it, and its purpose is to ascertain the gross profit or gross loss. That was the main purpose related to the trading account. Clear with it? So activities which are basically going to generate the revenue of the business, like sales of services or sales of goods or closing stock, that is to be showcased on the right sides. So whatsoever the sales you are doing or whatsoever the closing stock will be there, that will be on the right side, that will be on the credit side, and let's say opening stock, and let's say you have made some purchases or any of the direct expenses, those are to be on the debit side, that is on the left side. So in the case of the trading account, we are having the debit side, and we are having the credit side. When I'm talking about the credit side, there will be all incomes, because I told you, it's a nominal account. Trading account is what? It's a nominal account. So what's all the income will be there? Income will be generated in case of business by what? When you'll be selling something, then only you'll be having the income, right? So incomes, that is your sales, or we can say net sales. That's why we have said it to be less return inwards, right? That's a net sales. So net sales will be on the credit side, right? Because that is your income, right? And whatsoever the purchases that you have made, net purchases, let's say, it may also be the case that you have purchased a raw material, but you return the faulty raw material, right? So whatsoever the net purchases, that will be on the debit side or credit side. Purchases is what? Purchases is an expense or income? It's an expense. So that will be on the debit side, on the left side. That will be on the left side, right? And further, whatsoever the direct expenses, these all are the direct expenses. Direct expense means what? The expense which is directly incurred on the manufacturing of the goods or services. That is your direct expense. That is your direct expense. Like the inward carriage, the carriage inward. This is specifically mentioned over here. Why it is mentioned? Because it is carriage inward. Now carriage inward is an direct expense or indirect expense? It's a direct expense. Why? There are two types of carriage. If I'm going to talk about the carriage, there are two types of carriage. One, it is carriage inward, or it could be carriage outward. Now carriage inward is like when we are asking our vendor to send the raw material to my manufacturing factory. That is carriage inward. Now it is related to the direct expense related to production, right? But when we have sold the product to the customer, sometimes the seller may offer that we will be making the goods reach your destination, right? So that is basically carriage outward. Now carriage outward is also an expense, but that is an indirect expense, whereas the carriage inward is a direct expense. Carriage inward is a direct expense. Clear with it? Please confirm. Clear with it? So what's of the direct expenses? Those are to be mentioned under the trading account. Indirect expenses are not mentioned under the trading account. Make sure those are not mentioned under the trading account. So it will be starting with the opening balance, right? Opening balance will be on the debit side, and further purchases will be on the debit side, and any direct expenses that will be on the debit side. The direct expenses could be related to wages, could be related to factory rent, it could be related to the custom duty, or let's say any power fuel that is related to factory or manufacturing expenses. Those all will be covered. Now if the salary is paid to the supervisor, to the manufacturing supervisor, that will be a direct expense. But the salary which is paid to the sales department, that will be an indirect expense. Salary paid to the laborers, that's a direct expense, right? So we have to keep in mind. Okay, so in the very end, either you will be having the gross profit or gross loss. So if it is gross profit, it will be on the debit side. It will be on the debit side. And if it's a gross loss, it will be on the credit side, right? And this balance is then transferred to the profit and loss account. This will be then be transferred to the profit and loss account. And gross profit is equal to what? It is equal to sales minus cost of sales. Gross profit is what? It is sales minus cost of sales. Now what is sales? Sales is net sales plus closing stock. Sales is net sales plus closing stock, right? And what about the cost of sales? Cost of sales is going to be what? It is opening stock plus purchases plus direct expenses. And further, you are to subtract the closing stock out of it, right? So opening stock appears on what side? It may be asked in the exam. Opening stock appears on the debit side. Closing stock appears on the credit side. If the gross profit is there, it is on the debit side. Gross loss there, that is on the credit side, right? So that's the case. And what's of the balance is there? Let's say if it is having gross profit or 55 lakhs, gross profit or 55 lakh is there. Now that will be a opening balance of the profit and loss account. This gross profit will be the opening balance of P&L account, profit and loss account, right? So the first step is a trading account, and after that P&L account, right? So this is what we follow. And from P&L account, we are to calculate, it will be help us to calculating net profit or net loss, right? Now, are you able to understand these things? Okay, now let's solve question based upon it. Let me just clear the points from here. Let's just solve the questions based upon it. That's all about the theoretical part of this chapter, right? So here we are provided with the data. It says a firm reports sale of rupees 12 lakh and gross profit of 30% on cost of sales. Opening stock is 1.5 lakh. Closing stock is 2 lakh 10,000. Direct expenses are 90,000. We are to determine the net purchases. We are to determine the net purchases. Now, the sales are equal to what? If we look at the sales amount is equal to what? It is cost of sales plus gross profit. If we say sales is equal to cost of sales plus gross profit, right? And cost of sales is equal to what? If we are to calculate the cost of sales, we can be calculating from this formula only. And gross profit is given to be what? It is given to be 30% of cost of sales. It is given to be 30% of the cost of sales. So we can say what? That sales is equal to cost of sales plus 30% of cost of sales, means 130% of cost of sales, because this is representing 100% of cost of sales, this is representing 30% of cost of sales. So total we can say it is 1.30 into cost of sales. 1.30 into cost of sales. And further, we are provided with the amount of sales here that is given in the question, right? So the sales is given to be 12 lakh rupees. So the cost of sales would be equal to this. It will be equal to 12 lakh divided by 1.3, 923076. 923076. Clear with it? Is that clear? That is your cost of sales. So we simply use the funda that your sales is equal to cost of sales plus gross profit. That is your total sales amount. Na? Cost of sales is representing what? That what you have spent directly for the production purposes. That is your cost of sales. Whether we are talking about the raw material, whether we are talking about the wages, whether we are talking about the electricity or something. And what is gross profit? The amount that you have earned over the cost of sales. So that's the gross profit. And when we add them up, that will be equal to sales, right? Simple as that. So from that, we calculated the cost of sales, right? Now we have to use the COGS formula because we were to determine the net purchases. We were to determine the net purchases. And what was the COGS formula, if you remember? So we just calculated cost of sales, means COGS we have already calculated now, right? And what was the formula related to it? It was opening stock. Opening stock, what's over the direct expenses? What's over the direct expenses plus net purchases minus closing stock. That was the formula. Now, you already know COGS. We have already calculated 923076 is equal to opening stock. Now the opening stock is given to be 1.5 lakh. It is 1,50,000 plus direct expenses given to be 90,000. Net purchases we have to calculate minus closing stock given to be 2,10,000. Now you can easily be calculating. Now the net purchases will become equal to 923076 minus 1,50,000 minus 90,000 and plus 2,10,000. So that is 893076. 893076. Easy as that, right? You can be asked such type of numerical in the exams there. Such type of questions can be asked in the exam. Now let's move toward the second question. Now sales are given to be 18 lakh rupees. Gross profit is given, opening stock is given, closing stock is given. If net purchases are 10,50,000, calculate the direct expenses. Calculate the direct expenses and comment on stock movement impact. So what will be the logic? What will be the logic? First of all, just do let me know how we can be calculating the COGS. Now we know the COGS formula. I already told you COGS formula. It is very much easy. Your opening stock plus net purchases plus direct expenses minus closing stock. This is your formula. This is a COGS formula, right? And what is COGS equal to? Cost of goods sold. It is equal to sales minus gross profit. Because you are not provided with the COGS value itself, sales minus gross profit. From there, you can be ascertaining your COGS. Now, the sales is clearly given. Sales is given over here or not? Sales are given to be 18 lakh rupees. So 18 lakh, and gross profit is given 4.5 lakh. Now easily you can be calculating the COGS. So COGS is 13 lakh and 50,000, right? That is your COGS value. Now we have to calculate what? We have to calculate direct expenses. Very easy to calculate. Just put in the values over here. 13 lakh 50,000 is equal to opening stock 2 lakh 40,000 plus net purchases 10 lakh 50,000, and direct expenses we have to calculate. Closing stock is given to 1,80,000. Just solve this thing and you are done with it. Just solve this thing and you're done with it. So it is 13 lakh 50,000 minus 10 lakh 50,000 minus 2 lakh 40,000 plus 1 lakh 80,000. So it is 2 lakh and 40,000. The direct expenses are 2 lakh 40,000. Right? Now they've also asked you that comment on stock movement impact. Stock movement impact. Now see, when you have to look at the stock movement, just look at the opening stock and the closing stock. Your opening stock is 2,40,000. Your closing stock is 1,80,000, which is 60,000 lesser than the opening stock, which is 60,000 lesser than the opening stock. It means what? That there is increase in cost of sales. There is increase in cost of sales, and the gross profit is going to be reduced. And gross profit is going to be reduced. That's the main point related to it. Clear with it? Okay. Now let's jump to the third question. A trader maintains gross profit at 25% of the sales. Gross profit at 25% of the sales. And if opening stock is 3 lakh, opening stock is 3 lakh, net purchases is given, direct expenses is given, closing stock is undervalued by 80,000, right? Determine the true sales. We are to calculate the true sales. Now, point is, first of all, we have to look at the cost of sales. Cost of goods sold, COGS. That will be equal to what? Opening stock. That is 3 lakh rupees plus net purchases 12 lakh rupees plus direct expenses 1 lakh rupees minus closing stock. That is to be done, right? So if we are to do that, we will be saying it's CL over there, but CL is not known for now, right? And what will be the true value? Because it is given in the question that the value is undervalued. Closing stock value is undervalued. That let's say if its value is 1,80,000, it is reported to be 80,000 only. It is reported to be 1 lakh only, right? So here we are saying, we are talking about the reported value. We are talking about the reported value of the closing stock. So actual closing stock value, that will be equal to reported value plus 80,000. Clear with it so far? Definitely it is so far, right? So it will be the case. And also the gross profit, it is said to be 25% of the sales. 25% of the sales means the cost of sales, that COGS, is going to be 75% of the sales, right? So definitely that is, it is indicating what? So when we are saying that the gross profit is basically 25% of the sales, it means what? That the cost of sales is also 75% of the sales, right? Why so? Because we know the logic behind these two things, that your gross profit, that your basic let's say gross profit is basically going to be what? It is going to be a percentage of the sales. And whenever a percentage is given, we simply know that there is a relationship between the gross profit and the COGS. And what is the relationship? We already covered previously. What is the relationship? It is COGS, cost of goods sold, plus gross profit is equal to sales. If you remember, this was a relationship. That was a relationship I told you, no? That is a relationship that is existing between the COGS and the GP and the sales. That in the cost, if you're going to add the gross margin, you'll be getting the sales amount, right? So we now know what? That the gross profit is what? Gross profit is 25% of the sales. Now, if I'm mentioning this is 25% of the sales, means COGS is equal plus 25% of sales equal to 100% of sales. So we can say, implying from here, that COGS is equal to 75% of sales. That's why I clearly said over here that COGS, gross profit is 25% of sales. It means COGS is what? It is 75% of sales. Clear with it? Clear with it so far? Right? So if we are to correct the value, we can easily be calculating the same. So after correcting the closing stock, cost of sales reduced by 80,000, means the gross profit is increased and sales proportionately increased, right? So that is the main funda related to it. What is said over here? Determine the true sales. We were asked to determine the true sales here. So kindly please confirm if you have understood the logic so far. Do confirm that if you understood the logic so far. We just write down the COGS value and we said that the actual closing stock will be valuing more, so it is 80,000 above, right? And now we have to calculate the value. Now we have to calculate the value, so we have to calculate accordingly. Okay, so we basically rearranged everything. I just told you that COGS is equal to 75% of the sales. Now the sales would be equal to your opening stock plus purchases plus direct expenses plus gross profit minus the closing stock, right? So cost of goods sold is simply equal to what? It is equal to 75% of the sales. It is equal to 75% of the sales. Or simply we can say, if we equate these two things, these two values over here, it means 75% of sales is equal to 3 lakh plus 12 lakh plus 1 lakh minus closing value stock. But this is undervalued and we have to upvalue it. So it is CL plus 80,000. CL plus 80,000, right? And when we are going to solve this, we'll be having two values. We'll be having value like 0. Let's say sales to be S. So 0.75 S is equal to 3 lakh plus 12 lakh, 15 lakh plus 1 lakh, 16 lakh, and 16 lakh minus 80,000. That is 15 lakh 20,000. minus CL. This is going to be my first equation. This is going to be my first equation, right? And my gross profit, true gross profit would be equal to what? Reported gross profit plus 80,000. Why so? Because reported trading account is basically using undervalued closing stock, right? So COGS is basically 80,000 higher and reducing the GP, that is a gross profit, by 80,000. So the true gross profit, if we talk about the true gross profit, that will be basically is to be increased because that was previously reduced when I was using the undervalued closing stock value. In that scenario, my COGS is higher by 80,000. So that's why my GP was basically reduced by 80,000. So if I'm to look at the true GP value, that is basically your reported GP, that is GP plus 80,000. That is my actual gross profit. And GP is 25% of sales, simply given. I told you over here. So GP is what? GP is 25% of sales. We have written over here. So from here, if we calculated, the sales would be equal to what? The sales would be equal to what? We calculated gross profit is equal to 25% of the sales, and sales would be equal to 80,000. That will be equivalent to 80,000 divided by 25%. So that is my sales value from here, because 80,000 is equal to the 25% of the sales difference. That is my gross profit, right? So from here we calculate the sales to be 3,20,000. This is your sales value, 3,20,000. Now we'll be putting in this value from here to there. From here to there, we have to put the value and we'll be calculating the answer. So that will be equivalent to 16 lakh minus C, two lakh 40,000 plus 15 lakh 20,000, 17 lakh 60,000, and further we have to add the 80,000 value to it. So it is 15 lakh 20,000 plus 3,20,000 into 0.75. Into this value we have to put the values, right? So 0.75, that is 2,40,000, and 15,20,000 minus 2,40,000, that is 12,80,000, right? So the true sales is what? True sales is 3,20,000. We have already calculated over here. So that would be the answer, right? So that will be all related to this video. I hope that you must have find this video useful and आपने बहुत सी चीजों को सीखा होगा, समझ में आई ये वीडियो। आपको कंटेंट अच्छा लगा तो वीडियो को लाइक जरूर करें, वीडियो को शेयर जरूर करें, और फ्री वीडियोस एंड पीडीएफ के लिए जल्दी से जल्दी एप्लीकेशन को डाउनलोड कर लो। टॉप लेफ्ट कॉर्नर में आपको लिंक मिल जाएगा iibf.info का, वहां पर कोर्स अवेलेबल है, फ्री जेआईबी कोर्स अवेलेबल है, उसको एनरोल कर लो, फ्री है वो, जस्ट उसमें साइन अप करना है एंड आपको सब चीजें मिल जाएंगी वहां पे, एंड स्टार्ट प्रिपेयरिंग फॉर दिस। थैंक यू सो मच एंड सी यू अगेन इन द नेक्स्ट वीडियो। थैंक यू, हैप्पी लर्निंग।